I don't know about you, but for me, sometimes I find it real interesting to see where other people are investing. Where are they putting their money? Are they putting in the stocks, bonds? Where are they investing their money? Maybe what particular sectors of the market they're investing in, technology, real estate, healthcare, whatever it might be. And I found an interesting article with lots of great information in terms of easy to understand charts where they show that where people are putting their money back in 2021. So I think you'll find some real interesting, some fascinating things coming up on Investing Education with me, Mr. B. Welcome to the channel where we help you to learn fast so you can become a confident and successful investor. If that sounds interesting to you, go ahead and hit that subscribe button. Okay, so let's look at these charts here and see where people's money is going. And really what it's looking at is mutual funds and exchange traded funds. This is Morningstar did the analysis, and that's their specialty, is mutual funds and exchange traded funds. And we're going to see where money is inflowing, where's money going in terms of broader types of sectors and things within mutual funds and ETFs, or where money is getting pulled out and being taken out. So it can give us a real insight into what people are thinking in terms of the overall market. So let's start and take a look at that. All right, I have this interesting article from Morningstar, where investors put their money in 2021. Where's the money going in terms of mutual funds and exchange traded funds? And the subheading here, a wave of cash hit all areas of the fund market. So money is definitely flowing in. So let's take a look at some of these charts and see what's actually happening here. And basically, here's this first chart, is very interesting. Investors flood into all types of funds. So we see how many $1 billion worth of money is coming into these various funds. And this is going back over time from 2017 to 2021. When we look over here on the right, we can see the purple is international equity, well up. Sector equity would be so international equity would be international stocks, right? So this is stocks that are outside the United States, because Morningstar is a USA-based company. So outside the United States, a lot of money going in out there into mutual funds and ETFs. Sectors would be like sector-specific funds, like a technology fund or a healthcare or real estate type fund. The yellow here is U.S. equity or U.S. stocks. So that could be an actively traded stock fund, or it could be an index fund. It's just something that's focused on U.S. equity or stocks. Then we have municipal bonds and taxable bonds. The difference is municipal bonds, if you happen to live in the United States, they can give you some tax advantages with that. I pay a little higher tax rate, so I have some money in municipal bonds, for example, to try to have some safe money. I get to avoid some taxes legally from it because it's a reward for investing in states and cities and with these municipal bonds. So it doesn't give you great returns, but gives you a good tax advantage. And then, of course, pretty much every other bond is going to fall in here, whether it's corporate bonds or federal government bonds, whatever's going to fall in here. So what's interesting to see here is all the categories are up, every single one up, and way up too. I mean, look back over time here, like everything's way up. So money was definitely flying into the markets in exchange trade funds and mutual funds in 2021. We think back at 2020, of course, well, that's when we had the beginning of the COVID-19 pandemic. And a lot of money people, got scared, panicked for sure, and pulled a lot of money out of stock, U.S. stocks, mutual funds, and ETFs. A lot of money out of the other, international stocks too. So money's flowing out of stocks. Other than sectors did well, so that's interesting. So they kind of were pinpointing there, and money really kind of stayed safe or on the sidelines in bond funds. But if we see 2021, we see that all the areas are up, including bonds. This is interesting with bonds. Usually our interest rates are coming down, especially in 2020. We're trying to move interest rates down, but bonds did well. I think that's more flight to safety type stuff. But you can see that all the other stuff is definitely up, especially all these stock sectors. So a very interesting thing saying, well, what are people investing in? Well, they're investing in everything, really. But let's look closely at this and break this down a little bit further. So we're going to go to another chart here. And this here is a typical Morningstar boxes. They do these boxes here, and the headline here, passive value funds grew the fastest, passive being like index funds versus like an actively managed fund where you have a fund manager. But active funds actually, it's interesting, I won't show it here, but they grew too, at least looking at some of their things they were writing in the article. By the way, I'll have the article with all these things linked in the description below so you can look at the full article. Talks a little bit more about bonds and stuff too, you can take a look at that. So this is growth rate up here as far as a percentage. Basically, money flowing in, how much is it growing or falling? This is not return. This is not like a ETF returns or performance. So if we look at all funds here, and if we look at large cap, big companies, value type funds, and I'll explain this all in a second here, but value type funds, we see 4.47. That's not, it didn't return 4.47% as far as performance. This is 4.47% growth in money flowing into these funds. Where are people putting their money? They're putting them in these types of funds. So if you look on the left hand and the right hand side, this is for all funds, then we'll talk about active and passive funds. But this would be like small cap, mid cap, and large cap. Think small, medium, large companies would be a way to think of that, is one way to look at it. A more accurate way is market capitalization is the number of shares times the share price. So Apple has a high share price and a lot of shares out there, and as a big company, they would show up in the large cap area versus other types of companies. Value, core, and growth. Well, growth is pretty self-explanatory. You'll see a lot of technology funds in there. This is, fast-growing type companies is the idea behind growth companies. Value is misnamed here. I wish they would put dividend. It's really more like dividend type funds. A lot of folks, when I think of value, I think of undervalued stocks or value investing. I have a whole course on value investing. Check that out, description below on those kind of things, all the courses. But value investing is more of that, but you have to kind of look at these Morningstar boxes and know that they just mean dividend kind of funds. And then core is kind of like blend. You might see this named as blend. It's kind of a mixture of both. So we have dividend, blend, and growth is a better way to look at this. And as you can see, money is flowing in 2021, flowing more into this value and blend. And everything's kind of flowing away from growth stocks. And we see that in early 2022, where growth stocks are under pressure as far as stock prices and things coming down. So in terms of mutual funds and ETFs and money flowing into them, we're seeing more of that money coming out of growth and either going on the sidelines or going into more of these value type plays, some core. In fact, the top area is small cap blends, followed by large cap value or large cap dividend. And you can see the growth is all kind of negative with money flowing out. So active funds, the mid cap core had some growth numbers, but everything else is negative. Which is kind of the continuing trend. Though in the article, early in the article, it talks about how money was still flowing into active funds, and active funds doing better than ever. But then this chart doesn't seem to match up with that statement. So you have to look closer at that. But that's kind of the idea, at least directionally, where money is flowing out of. Like a lot of money is flowing out of growth and more into value. So for this mid-cap value, there's more of these mid-cap blends. So that's interesting. And then passive would be like your index funds. And index funds, as far as money coming into index funds, people have been investing in index funds, taking advantage of those low costs of those index funds, and doing that for quite some time now. And they've always been growing. They're continuing to grow. So you can see the big winner here is that value or dividend type stocks. Lots of money flowing into that. Maybe a little bit less volatile type stocks. But growth was getting some too with index funds. Growth type funds were getting money coming in as well. So overall, people are putting money into stocks, and they're putting money into international stocks and USA stocks, and they're putting it primarily through index funds as well. Let's take a look at one more chart here that I think you'll find interesting, where we're going to look at individual sectors of the market. And this chart here shows the inflow in billions of money coming into different types of sectors here by quarter. So we have quarter 1, quarter 2, quarter 3, quarter 4 of 2021. So where are people putting their money in terms of individual stock or equity sectors, right? And on the right here, you can see the different sectors listed out with their different colors: financial, real estate, natural resources, energy, equity energy, the same thing as energy stocks like ExxonMobil, for example. Technology, infrastructure type stocks, like housing, that type of stuff, construction, industrials, typical manufacturers, and healthcare, variety of healthcare from pharmaceuticals to biotech, all would be lumped into healthcare. So these are your different, your different sectors or different, things that you're looking at here in terms of sectors or industries. And you can see in Q1, there was a lot of money going into financials, right? Because interest rates were falling. Interest rates were being managed down to try to respond to the 2020 pandemic. So when interest rates go down, banks and financial institutions tend to do better. So people were seeing that performance and putting money into financials. And they were already starting to get out of healthcare and technology. If we were to go back into Q4 of 2020, it would show that. But this is what they're highlighting here. And then if you look in Q2, you can see still financials are doing well. real estate starts to really pick up, right? Interest rates are getting low and people are starting to buy, and they're seeing these rise in valuations of a lot of real estate. So real estate investment trusts or REITs are doing well. Things related to home building, or not home building, but home ownership type real estate, or even commercial real estate's doing well. Natural resources doing well. It's funny, they put things like energy funds collected this amount of money and natural resource funds grew quickly, but then you look at the Q3 here, natural resources in the orange, it doesn't look like it's growing, it looks like it's falling. So again, a little dichotomy in the whole chart here. It's something to look a little closer at too. But then Q4, we see again the rise of real estate funds, and we see that staying strong. Banks are coming a little bit more under pressure, and people are starting to maybe look at rotating back into technology. But as we see in Q2, we see technology under a lot of pressure too. So this brings it down over by quarter if you're curious about how it might be flowing into these individual type of sectors or industries, within them. So with this, it's kind of, hopefully you took this and say, okay, that's interesting. I'm not sure I would say change your investing behavior based on what other people are doing. In fact, if you're a contrarian investor, you would want to do a little bit more of what the opposite of what people are doing. You think of like value investors like Warren Buffett looking for undervalued stocks. If technology stocks are going way down, he might be looking for an opportunity to buy technology stocks. I have a whole video around undervalued stocks, for example. And in the video, one of the ones I highlighted was actually Activision Blizzard, which then was recently bought out purchased by Microsoft. So there's some interesting things going there, seeing that undervalued stock, and then Microsoft, for a variety of reasons, invested in that, getting the metaverse, expanding their gaming platform. A lot of reasons for that. So we got some videos around both those types of things. So I hope that gives you an idea and more of an interesting type thing around where is money flowing in and out. So again, if you like these kind of videos, go ahead and hit that subscribe button. In the description below is the link to the whole article, so you can get a little more detail on that and look at some bonds and different things as well too. And then certainly check out the courses and all the other free stuff I got below as well. So with that, don't let it change your investing, but it's kind of interesting to see where money is flowing in and out of exchange traded funds, ETFs, and mutual funds. So wish you all the best of luck in your investing journey.